Now we're going to present about Microsoft company. Our group member are me, Leonardo, Krishna, Natasha, Novia, and Feli. The history of Microsoft company. It was based on the Washington, USA. It was founded by Bill Gates and Paul Allen on April 4, 1975. And in 1986, initial public offering and subsequent rise in its share price created 3 billionaires and an estimated 12,000 millionaires from Microsoft employees. And in 1990s, increasingly diversified from the operating system market and has made a number of corporate acquisitions. And in 2013, market dominant in both the IBM PC compatible operating system and Office software suite markets. And in June 2012, the personal computer production market for the first time with the launch of the Microsoft Surface, a line of tablet computers. And in October 2014, acquired Nokia to succeed in mobile device market was incurring losses due to acquisition, which was visible in its fiscal first quarter earnings.
For the current ratio, which is from 2011 to 2012, there is no changes in current ratio, but there is an increase 0.35 from 2012 to 2013. It means that when it keeps increasing, it will be bad situation for the company. Second one will be quick ratio. There is the decrease from 2.55 to 1.52 throughout the years of 2011 to 2012, and it is increasing 2.89 in 2013, which means that it is a good condition where it keep increasing. Inventory turnover is decreasing between the years of 2011 to 2012, which is from 14.75 to 13.97, and keeps on decreasing on the next year into 13.17. If this situation keep increasing, it will be bad condition to the company. Average age of inventory, the ability of company to sell off the inventory is decreasing from 24.74 days, 26.12 days, and prolonged to 27.71 days. So it is lower from previous year. And if this keep increasing, it will be bad to the company because they can't sell off the inventory quick. Average collection period is increased, whereby the year 2013 become 81.99 days. The customer are able to pay in a long period rather than the previous years. And also the total asset turnover. Total asset turnover are decreasing from 0.64 times of sales to 0.55 times of sales in 2013, which means the ability to generate every $1 becomes lower. So it is not a good condition for the company if they can't generate the asset turnover higher. Debt ratio. It slightly changes from 2011 to 2013, whereby it will keep decreasing. It means that the company having good condition to keep their asset in order to finance the debt. Times interest earn ratio. Times interest earn ratio have decreased from year 2011, 95.15 times of interest, 2012, 58.59 times to pay off its interest, which significantly dropped, and able to keep in 63 times of ability to pay off its interest, which is good for the company.
So for the gross profit margin, there is a decrease of 1.7% from 2011 to 2012, and it keeps on decreasing to 74% in 2013, so it is not good for the company. So the next one is operating profit margin. The operating profit margin is decreasing from 0.388 to 0.229 at the year of 2011 to 2012, and it is increased up to 0.35. So despite of the decreasing on the previous years, the company could manage to recover the ground on 2013. The next one, it will be next profit margin. The next profit margin is declining very much from 2011 to 2013, which is 1.33 to 0.23 and increase a bit to 0.28. So it is not good because the company could only manage to generate $0.28 from every $1 of sales. Earning per share. In the year of 2011, they gained its peak on earning per share, which is 2.73, and began to decrease on the next year into 2.02, and increased 0.59 on 2013 into 2.61. This number is not good for the investor because they receive less money from every stock in the company. Return on total asset. The company managed to improve the ROA from 21.29% to 23% in 2011 to 2012, but they had a quite big decline on 2013, which is into 15.4%. This is not desirable condition for the common shareholders because they will receive less money from each of their stocks. Return of equity. In 2011, the company has high ROE, which is 40.55%, and it is declining drastically in the following next 2 years, which is 25.5% in 2012 and to 27.7% in 2013. This situation is not favorable for the stockholders. Price earning ratio. The price earning ratio is going up and down on the following 3 years. In the year of 2011, it is sitting in $10.79 and increasing in 2012 to $16.31 and again decreasing to 13.70 on 2013. It is quite good for the company because they can manage to stay above the lowest point in 2011. And the last one is market share ratio. The market book value is decreasing steadily from 4.38 in 2011 to 4.17 in 2012 and 3.80 in 2013. It is not good if this situation is still happening because this number will decide the company's stock price in the market. Significant activity that contribute to the big change in the particular ratio. 2013 to 2012, revenue increased higher revenue from Windows 8 Surface that and the new Office, offset in the part by the impact on the decline in the x86 PC market. Operating income grew primarily due to the $6.2 billion goodwill impairment charge related to our OCD business recorded during the prior years. 2012 to 2011, revenue increased in 2010. Microsoft Office system decline in Windows operating system. $540 million of revenue relating to the Windows upgrade offer. Operating income decrease in the goodwill impairment charge of $6.2 billion related to the OCD business segment.
Based on the financial highlights, it can be seen that the financial condition of the company is improving on its every year. The most important for us investor is the amount of the stockholders' equity that roughly increased as high as twice from 2009 to 2013, which is $39,558 to $78,944. And cash dividends declared per share is also increased almost twice on those years, which is $0.52 to $0.92. So it is really profitable if we invest the money on the company because the financial of the company is really stable and foremost. It keeps on improving on every year. And the next table shows the high and low price of the stock that are listed in the Nasdaq stock market. From our point of view, it is quite safe to invest the company because if we see the highs and the lows do not have a big dramatic gap between them, and the difference is reasonably constant between $3 until $7. There is no sudden drop in the stock price, and between the quarters, the price of the stock is usually increasing and the condition is better than the following year, which is 2013. And the last thing is we can say that the total of 2,500,000 ringgit Malaysia we are going to invest. We increase its amount in a safe and steady way. It is a lot safer to invest in a stable company, because let us say if the company is having trouble and the stock at the market is decreasing its value, it will not be in the drastic drop, but in amount, and it is still tolerable.